Okay, we still don't have an intro, but we got a title for this episode here on the weekly roundup, and that's the discount show, because it seems everyone's given discounts, right, Curt?
Or I'm thinking the price is right.
Oh,
Let's
yeah.
just spin the wheel and see where this thing lands. Because at this point, wow, we're talking from, MPI's 100 million to all the way to the US, where we're talking, $6 billion of refunded auto premium. Holy cow.
Like, exactly. Somehow the good nature of insurance companies, because no one's ever said that if you're a consumer, is coming out into this, like Christmas and Hanukkah and whatever else you want to call it. It's like you get a rebate and you get a rebate and you get a rebate. It's like Oprah Winfrey.
Yeah, exactly. So, fortunately, we've been down this path in our jurisdiction.
Yeah.
For listeners, I know we have listeners all over North America, but, where Pete and I reside, we've been through this rebate world before. We've seen the checks come out. Fortunately, for the distribution channel, it hasn't been a negative. It's always been a positive for the consumer. I saw a post on LinkedIn from one of our friendly brokers out there already, letting their customers know they're getting back like 11% of their premium. I think, TJ McRedmond jumping on top of this really quickly. Other brokers should be doing the same thing. This is a good story, like you just said, Pete.
Yeah. It should be something that brokers are picking up on social media with, advising their clients, whatever channels they're using. And let's think about it this way. When's the last time in a private auto province an insurance company ever gave money back to anyone?
Oh,
never. It's never happened, as far as I know. And I'm happy to be proven wrong. So if you're in Ontario, Alberta, the Maritimes, correct us if we're wrong. Ken Myers, we know you listen. You tell us if we're wrong, because we can't recall any time that this has happened. But
and we're saying IBC saying 600 million.
Yeah.
Across Canada. We know it's 110 million right here in Manitoba.
Yeah.
I can't see how it's only 600 million. I think personally it should be a little higher if Manitoba can dig up 110.
Yeah, there's $1 billion of premiums in Manitoba. So how much is there in Ontario and Alberta?
Yeah.
Right? Like, there's got to be way more than that. What about Quebec?
Well, we always say, what about Quebec? We just a random.
What about Quebec?
That's an open comment. Yeah.
Yeah, what about Quebec?
What about Quebec? Yeah. There's a question. Yeah. We're not answering that one today.
No. We'll steer clear of that. But, it'll be interesting. So now I have to take a political shot, because you kind of wonder if everyone in Alberta will actually hang on to those checks, or those treat it like Ralph bucks, like they did, what it was, 10 years, 12 years ago, when they got those big fat checks that they probably wish they were sitting in the government coffers now.
Oh, man.
That's mean.
Jeez, yeah.
No, we don't want anything bad to happen to anyone, but man, it's sure showing you right now, just when you think about rebates and you think about funds that governments need, given all the programming that's coming out, like how nice it is to have a reserve. And governments don't keep reserves, but Alberta, you could have had one.
Yeah. Well, and I think here in our jurisdiction in Manitoba, there's a rainy day fund. I know the province has been tapping into that. So fortunately for us, we can pull some of those dollars down during these times. It is amazing. I mean, we did the interview and posted it this week on what Scott Treasure is doing with Scott McInnes. And, I guess at the end of the day, Albertans going to get a refund on their auto insurance. Now they can go spend it on something new that's available in their jurisdiction, which is the local cannabis.
Yeah, go see the local cannabis. The botanist. Bingo. Yeah, there you go. Yeah. That was fun. That was a fun episode. And if you haven't heard it, it's on the website right now, and it's on LinkedIn, on our LinkedIn page. But go take a listen. Insuring cannabis and how you look at risk and stuff. And you probably haven't checked it yet, Curt, but Ken Myers, a friend of ours out in Nova Scotia, sent a nice message to Scott and I on the Twitter account, just saying he really liked it and talked about how we're not looking at underwriting like it should be looked at. And Ken's got some insight on there, and we hope to get him on the show soon. Former president of IBAC, so that'd be kind of fun too.
That would be great. Excellent. So now let's crack open this egg and say we're getting auto insurance premiums back. We've got 40% of our population working from home, roughly 20% not in their normal job situation, I think is how they kind of phrase it.
Yep.
Not to say they're all unemployed, but just their work's been disrupted, let's say in some capacity. So let's just round that off at 50% of the population is not going into work.
Yep.
I don't know. What's the exposure to your home insurance today?
Okay.
Is it less?
Exactly. So this is going to be an interesting data point. And we scan things that we see or talked about in the industry. That's why we do the roundup. What's being talked about? I don't think anyone's talking about this. And you brought it to my attention because I hadn't really been thinking this way. But what happens, right? Now, if we have data points that losses are down because there's people in the home where maybe crime is down, maybe water damage claims are down because you're home and you didn't leave the house when you ran the laundry. There's always someone there. There's going to be some interesting data points that come out from this because insurers can go back and they can say, well, non-essential services went into lockdown on this date. They've carried on by jurisdiction here. And what are our claims exposures in that time? What changed from what year like a year ago, 5 years ago, and the 10-year run in that same period? They're going to be able to run this and learn something about it. And should there be a refund?
Yeah. And I mean, you could make an argument that commercial insurance premiums could potentially go up because you're getting a run of losses that are happening because these criminals know that the businesses are in fact not as occupied as they should be. I think there is a general feeling out there that there has been an increase in B&Es around commercial property. But at the same time, should the home insurance premiums be covering those losses for the commercial business owners out there in the insurance marketplace? I don't think so. I can't see why a consumer should be carrying the brunt of that.
No, and think about this. Okay, where we live, it's a little different, but Canada is a funny place, and we'll take our friends in the States too. Northern states. Here, you come out of winter, spring, everyone comes up. We know from where we live that crime goes up in the spring. Warmer temperatures, people come out, garage break-ins happen, vandalism, all sorts of things. But there's people out walking everywhere just to get out because they're cooped up for all week. Like I've got people walking their dogs down the lanes because they don't want to, they want a social distance. Well, there's nowhere for anyone to commit a crime.
I backed out of the driveway last night at around 9 p.m. at night, and 2 people were jogging by in the dark.
Yeah.
I, nearly ran them over, but fortunately I didn't. But to your point, Pete, that these people are out, they're doing things not just between 8 a.m. and 7 p.m. I mean, they're just out doing things. So I'm with you. I think that right now we're seeing an incredibly different sort of habit being formed by people in general. And as a result, those habits should reflect some type of change in losses, whether up or down. And can't personally see how they could go up, but hey, I guess I'll have to be proven wrong, or we'll have to be proven wrong, and let's see what happens here.
Yeah, I actually want to hear some feedback. Like, if you're in a company side of things and you hear this, let us know. Talking to you, Graham Haig.
That's right.
Yeah.
Taking runs at us on Twitter now.
Yeah,
jeez.
Yeah, we know where our friends are. So that kind of leads to the other issue of the week that's been bandied around. Is this whole COVID thing going to kill parts of the broker distribution channel and how it's traditionally operated?
Hey, we started talking about that right from day one, you and I think we can see that there's been an evolution within the industry, and often these type of evolutions need a catalyst. We all talked about 9/11 earlier in this COVID run. There's no question, events like this are changing things. I mean, we did a major grocery shop at Superstore this morning at 8 a.m, drove up, pulled up, picked it up, put it in the car, went to Canadian Tire, same thing, dialed the number, stuff in the back, and we were home in under 45 minutes.
Wow.
Unheard of, right?
Yeah.
All on a Sunday morning.
Yeah.
Before 10 a.m. So to think that if it's affecting major things like, consumers on things like our food consumption, our homeware goods, like what we get from Canadian Tire. I mean, why can't it be assumed it's going to affect insurance?
I'm going to be the contrarian here, and I don't think it's going to in the way people think. We've got all sorts of ideas about this, but you need to shop for groceries every week. You need to go and run errands for your house. Maybe you're picking up chemicals for your hot tub or your pool, yard supplies. So you go to Canadian Tire, or you go to Home Depot, or you go to Lowe's, or whatever it is. Those are things that you can automate because there's specific products that you need. That's an easy thing. Insurance isn't a specific product it is unto itself, but it's not something where you can just read the label and go, oh, that's what I want, or that's my brand, because it's all based around regulation. So,
and whether the person at Superstore can't pull Heinz off the shelf and instead they give you no name, you just live with it for that next 2 weeks, right? You just go, oh, well, I guess that wasn't what I wanted, but I'm going to eat it anyhow, right?
Exactly.
A little different when it comes to your home insurance.
It is. And I think there's going to be efficiencies. I think brokers are going to find efficiencies, and there's going to be some efficiencies that stick, and consumers are going to say, okay, I don't actually have to come into the office. But over time, that will change again. And the thing that everyone's talking about, social media, wherever you go, is I can't wait to get out of the house. Right? So what are they going to do? They're going to come in, they're going to visit and go, oh, it's great to see you. Because the one thing that brokers have done better than anyone else is they formed relationships. Like, we know our clients. My local cashier at Canadian Tire doesn't know me. No one knows me at the Superstore. No one knows me at Safeway. No one knows me at Home Depot. But
they all know my wife at Sobeys. Like the manager, the till staff. I think honestly, I swear we must have built half the new store there because. Anyhow, that's raising 2 kids. It's all good. There you go.
But interesting enough, you do live in more of a suburban community, right? In the city, it's different. And you think of larger cities and stuff. I don't know. I'm the contrarian on this. I think there will be back office efficiencies. Brokers and agents are going to learn things about how they deliver services internally to be efficient. But the purchasing point, because unless you have a car insured every other month and you own 6 cars, you're going to be you're a once a year situation. Maybe you're a multiple time a year situation because you got a couple toys like a boat or a Sea-Doo or a snowmobile or something like that, or maybe you got a cottage. But once you've done it, you don't think about it. It's set it and forget it because someone else is thinking about it for you. And I think because consumers don't have to think about insurance all the time, and they don't have to think about it every month, not about the payment, but about what do I need to do to stock up for my insurance. It's not like food.
Now, as long as the broker is doing what you're saying, and the feeling out there by the consumer at times can be that they're not really keeping stock of me. Rather, they are treating me to some degree like a commodity. And are they shopping my renewal for me? Are they checking for the best options every time my policy comes up? And some brokers I truly believe are, and some I think aren't. So I guess there will be a sort of, not really a day of reckoning, but rather a transition towards those that can find the way to do all the things that the broker value proposition claims to be offering Canadians and people as agents in North America, or not. And the ones that are not, I think the customer is getting smarter. They're going to figure it out.
Someone is going to figure out a great opportunity here to do something unique and original. And I'm looking forward to what it happens. And I'm looking forward to seeing what our customers come back and say to us about things, because this is the point that I think brokers are going to have to be ready for. Is things will change, and you're going to have to be ready to adjust to your clients' new expectations. Those expectations may not be wildly off, but they're going to be changed and altered. And we have to, and instead of trying to pull them back to the old ways of doing things, we have to adjust to the new things, because chances are this isn't the last time we're going to be dealing with this. sadly.
Mailing a renewal letter. Bingo, right?
Oh, yeah.
Like, talk about needing to adjust. I mean, how many of us still, think that's the norm when the consumers out there are going, what? I got mail? Like, I got a piece of, so yeah, down to the basics, Pete. You're right. It's from A to Z. It's not just, it's not price. It's not a smiley face at the other end of the counter or across the desk. It's everything. And that adjustment's got to happen. It's got to happen quickly. And COVID, I think, is going to push people to have to adjust quicker. So, yeah, I think it's a great topic. Yeah. It's, along with rebates, I mean, heck, who wouldn't want to have a broker if they're sending them checks back in the mail?
Yeah. Yeah, exactly. Yeah, I did. There you go. You know what? That's the thing. If we could get, like, if you think about it just in Manitoba where we are, if we could get those MPI to allow us to deliver the checks, that'd be the best thing ever for brokers. Just showing up, handing them out. I'd love it. I'd be a mailman. It'd be awesome.
Totally.
Yeah.
So hey, we got one more topic. We're not going to dive in it today. We're going to look at it possibly later in the next week or two, but it's a big one that's out there is the IFRS 17, the rewriting of how insurers are going to have to report their income statements, profits, P&Ls at the end of starting in 2021. So I think this is a neat topic. I live with an accountant, so I know this is all the talk. I think Pete will table that one further down the road, but I know it's coming up over and over again here, like right now. It's the topic. And as brokers, and we talk a lot to brokers as former brokers, and you yourself a broker, Pete, that does this affect the broker channel? Do our insurers start reporting income differently? Does that change CPC checks?
Yeah.
Does that insure a few less snowmobiles, cottages, and boats, like you just said? Yeah,
exactly. You wonder because everyone's just sort of wrapping up CPC season right now. And, you should have sort of been able to say, what did we earn last year? And if this changes for next year, it's going to be very interesting.
For sure.
Okay, so that's it.
Let's say that's a wrap.
That's a wrap.
Have a good week.